give me a time frame, right? Pie in the sky, the next 5 to 7 years, I think so. The challenge is going to be as you move into Asia Pacific, Latin America, you're going to have all these people on mobile phones who never had pay TV and have very low ARPUs, but very, very large penetration numbers. So it's possible with all the people in the world who are mobilely connected, right? So in the near term, we're not expecting that, but on a 10, 15-year view, it's certainly possible.
And so to the point that David Zaslav was talking about in the interview earlier about the way in which you're going to be able to take all of this content of the two combined companies and sell it directly to consumers around the world, was he kind of over-egging the element to which this merger allows that to happen versus just some old rights deals running into expiry for things like, for example, HBO to the UK, previously with Sky? That deal starts to expire, and it's not necessarily a new opportunity. It's just a sort of passage of time factor.
Well, here's what I've learned. So we've covered Netflix for a long time. And the biggest mistake I made covering Netflix was thinking that the opportunity for programmers was pay TV penetration in all these international markets. It turns out that more people wanted to watch video than they wanted to watch pay TV. So the challenge is, how do you build a big enough, attractive bundle to bring people into that video ecosystem that never paid for subscription TV before? And I think that's what Zaslav is seeing, is if we take HBO and Discovery content and some sports in all these markets that were never fully penetrated like the US was for pay TV, that's their opportunity, right? And Netflix has shown you in all these markets, there's more people signing up for Netflix than for pay TV, right? So that is what he has to do. And he said to my question today on the call that he didn't think his content alone created urgency for people to sign up for Discovery Plus, right? He needs movies and sports and big ticket items that people would come to the package for.
So what does that package look like? I know they haven't really figured it out or communicated it yet of whether it's going to be one giant service or multiple lines like Disney does with ESPN Plus and Hulu. But which do you think the market would look more favorably on and which would work better?
I think within the U.S., you're going to see a Disney Plus approach, right? Where you'll have a Discovery Plus, Warner Media, almost like what they have with HBO Max, like Hulu and Disney Plus and ESPN Plus. That's going to be the U.S. I think internationally, you probably need one size fits all. Well, I don't know what the brand will be, either HBO or Discovery, some new brand. But I think here you can bundle because we paid for pay TV at a very high level for a long time. But internationally, you need to bring more to it and probably start with a lower price point to get people to sign up.
So how does this shake up your view of the winners and losers in streaming? Netflix, Disney still stay number 1, 2? Is this number 3? What happens to Comcast, our parent company? Give us the rundown.
Okay, so we've been saying, look, we think streaming is a very tough business. So start with that point. That this is not an easy business to be in. For all the reasons that David Faber mentioned, it takes a ton of capital and patience and content. The top two, clear as day, Netflix and Disney. These guys become a third player, and I think they have a really good potential to get some real scale. Then the rest of the industry needs to consolidate, right? I think Viacom, CBS, and NBC Universal don't have much chance here to compete in streaming. They're going to need to. They can't combine with each other, but they need to do something. And then everyone else is going to be more of a niche service, Lionsgate, AMC networks, right? So I think with this deal happening, the structure is sealed, right? You have the big three, then you have a lot of small players, and you don't want to be in the middle. And unfortunately for NBCU and Viacom, they're going to be in the middle, which is not a good place to be.
So when you look at the share price action today of all of these names, I mean, AT&T and Discovery are both lower now, and you're saying they've got a good shot at making this work. Do you like those two equities here?
Well, Craig Moffett covers AT&T. We have a sell on AT&T, and our issue has been from day one their balance sheet and the dividend coverage. I don't think Craig is changing his mind on that. And as far as Discovery, we know this is going to be a tough 12 months, right? There's going to be all types of hedging going on, people selling Discovery to buy AT&T, selling different shares of Discovery. But the way I look at this is this. When you look at the market caps of Netflix and Disney, the market's putting a massive premium on streaming assets. At Discovery, there's no premium for these assets. So I think when this deal closes, which is 12 months away, this will be kind of the value investor's opportunity to buy streaming assets at a deep discount to other guys' trade. And that'd be my pitch to people. But it's going to take some time. This is not going to be an easy next 6 to 12 months. It's given all the hedging and given also the fears of cord cutting, which are real.
Shepard Smith here. Thanks for watching CNBC on YouTube.